Okay, we'll give it a moment while people join and then go ahead and get started. I'm filling in. All right, I'm sure people will continue joining over the first minute or so. I know we have a lot to cover today, so we'll go ahead and get started. Good morning, everybody, and welcome to our CMFO Roundtable discussion. We're so glad to have you join us this morning for our first CMFO Roundtable of the year, and we appreciate you taking the time out of your morning to learn with us. As always, we have a great couple of discussion topics and presenters to welcome today, so we're very happy to have these people share their knowledge with you. I know there's a lot to cover. I want to remind you that we encourage your participation. Please submit any questions you have in the Q&A, and our moderators will do their best to get to them. And I will be chiming in to launch polls throughout. So thank you again for being here. And with that, I'd like to pass it over to Bud Jones, John Mooney, and Jon Rheinhardt to take it away.
Thanks, Katie. Glad everyone could be here today. We love doing these roundtables, and they are roundtables. So, please ask your question, join in to tell your stories or any comments you want to make on topics. Your input makes these all better. Mr. Rheinhardt, do you have anything?
No, I'll save mine for the second session, but thank you.
Okay, why don't we jump into it, Mr. Mooney?
Okay, again, thank you. Like everybody else said, thank you for joining us today. I'm just looking out the window now, and it looks really too beautiful to be stuck inside, but I'm glad you're all here for the next, 4 or 5 hours. I think that's what it is. We have some really great topics today, and the first one starts off with Jason Cena. It's going to be pay to play and related considerations. Jason is an attorney with Archer and Greiner PC. I'll give you a little bit about his bio, and he did send a link to his bio that I don't know if you have or not, but if you don't have it, I will put it up to the chat box again so that you can see the full bio and some of the representative experiences that he's had, some of the recent cases that he's been on. It's extensive. He does a great job. So without further ado, Jason represents public and private sector clients in government and regulatory affairs, litigation matters, land acquisition, redevelopment, public contracting, campaign finance compliance, and general governments. He handles a variety of litigation matters, including those related to Open Public Records Act and Open Public Meetings Act, tort claims, and private contracting issues, among others. Again, Jason has an extensive amount of experience that I will put that link in for you, but some of his professional and community involvement. He's a member of the New Jersey State Bar Association, Monmouth Bar Association, Jersey Shore Point Partnership, Board of Trustees co-chair, Young Professionals Committee, Shrewsbury Borough Council from 2019 to present. And his bar admissions are to New Jersey, New York, and the U.S. District Court for the District of New Jersey. So without that, any further ado, Jason, floor is yours. Thank you for coming today.
My pleasure. Thank you. I'm going to share my screen so you all can see my slideshow. Oops. All right. Can you all see my slideshow?
Yes.
Perfect. As John mentioned, my name is Jason Cena. I'm out of the Archer and Greiner office in Red Bank, New Jersey. One of the things I enjoy talking about and have also the pleasure of doing in my job is talking about campaign finance law. We advise public and private clients in this space, and it's highly technical, but I find it interesting, and I hope you do too. First, briefly, we'll talk about the legal framework of pay to play. I know it's a hot topic now with recent changes in law. We'll go through some examples of how different business entities are structured and how they report under the Reporting Act, the concept of reportable contributions, the concept of Chapter 271 reporting, meaning the obligation of a business entity who makes contributions to report to the government, and the concept of Chapter 19, the prohibitory provisions of pay to play, meaning whether or not you're eligible to receive a non-fair and open contract after having made political contributions. And then we'll talk about some of the significant changes, not all of them, but the most significant changes that I think apply from the Elections Transparency Act. And we'll take questions and have a discussion. In terms of general framework, political contributions made by vendors doing business in the public space at the local level generally raise three considerations. Number one, whether the contribution is reportable by the recipient committee, meaning the political entity that's receiving the money, to ELEC, whether the contribution would trigger an obligation for the vendor to file a long-form business entity disclosure statement with ELEC, and whether a contribution would make the vendor ineligible to receive an award of a non-fair and open contract under the prohibitory provisions of pay to play. Any entity that receives over $50,000 in revenue in a calendar year from public entities in New Jersey is required to file a business entity disclosure statement with ELEC. I'm sure many of us are familiar. Whether or not you file the long form business entity disclosure statement where you list all the contributions made and all the contracts you receive and their value, or the short form, which simply says, I haven't made any reportable contributions, can be a big deal to a vendor. Similarly, whether a contribution that is made by a vendor shows up on the recipient committee's report can be a big deal to a vendor. And of course, whether or not you get the work after you having made a contribution also is a big deal. So these things are, while they seem overly technical, some people would think it can be very important to the vendors making these contributions and to the government entities who award the contracts for obvious reasons. Examples of business entity structures. So the type of business entity that the vendor chooses to be organized under matters for reporting purposes, right? First, let's take a partnership entity. I'll use an example. Jones and Smith accounting firm, as a limited liability partnership, a partnership entity like an LLC can't make a contribution as an entity. Similar to tax treatment, right? LLC is passed through taxation. Well, the partnership and LLC can also not make a contribution as an entity. How that works is the contribution is attributed to the equity partner who is signing the check or who is designated on the attribution letter from the vendor to the political committee. An example of that, Jones Smith accounting firm makes a contribution to the mayor's political campaign, $200 check, says, please attribute this to Mr. Jones. That's how, and that contribution is attributed to Mr. Jones, not to the entity, because the entity can't make a contribution to the business entity. Different from a corporation. The contribution made from funds that are beneficially owned by a corporation is deemed a contribution of the corporation, right? If Smith Engineering Incorporated writes a check to the mayor's campaign account, that contribution is attributed to the corporation. Sole proprietor, similar to the partnership and LLC rule, sole proprietor isn't an entity, so the contribution is made and is attributed to the person who signs the check, having ownership over the funds. I used Bob Jones Landscaping as an example. You really don't see too many professionals who are sole proprietors these days. Maybe a solo practitioner attorney might fall within that category, but that's generally how those things are treated. As I mentioned before, the concept of a reportable contribution, this sort of ties in with the Elections Transparency Act, but a political contribution received in excess of $200 in the aggregate from a single source during the applicable period is reportable to ELEC by the recipient in some way. It used to be $300, and I'll get to that, but it's now $200. So that's why I left it at that in the slide. Calendar year versus election in terms of the relevant reporting period. A political party, for example, the relevant reporting period is the calendar year. For a candidate, the relevant reporting period is the election as defined by law, and the primary and general are separate elections, which I'll talk about further. The reports that are filed by the recipient committees, as we all know, are filed online. You can't paper file anymore with ELEC, and they're pretty easily accessible if you can figure out how to navigate the ELEC website. So people in the public who are sophisticated enough can go and look at who's donated to who, and it's out there in the public sphere if you've made a reportable contribution. Political party committee, an example of that, state political party, county or municipal. Not every municipality has a political party account. Some do, some don't, but it exists pursuant to law. And legislative leadership committees. Any contribution received during the calendar year in excess of 200 is reportable. Example of that, a $200 contribution from an individual to a municipal political party account made on January 1st is not reportable, but would become reportable if the contributor gave an additional dollar on December 1st because it's in the same calendar year and they're aggregated together. For a candidate committee, joint candidate committee or political committee, an example of that, Smith for county commissioner. Joint candidate committee would be Smith and Jones for borough council. Contribution received from a single source during the election fund report period in excess of $200 is reportable to ELEC. It's obviously different from the calendar year aggregation period for a political party, right? The primary and general are two separate elections as defined by law, which carry separate contribution limits and separate aggregation periods. The reporting period for each election ends with the last transaction occurring on the 17th day after the election. So an example of how this works is $200 contribution from an individual to a countywide candidate, say county commissioner, made on January 1st would be applicable to that candidate's primary election in June and would be unreportable to ELEC at $200. That same person, though, can then give another $200 on the 18th day after the primary and have it applied to the general. So you've given two unreportable contributions in the same year because they're not reportable because they're in different aggregation periods. So Chapter 271 reporting, as I mentioned earlier, requires certain disclosures from business entities receiving annual revenue over $50,000 from public entities. In any year that the vendor receives more than $50,000 from any public entity in New Jersey, has to file the business entity disclosure statement with ELEC, either indicating that you haven't made a reportable contribution during the year, or if you have, disclosing the contributions and listing out each public contract awarded. A contribution is to any candidate or holder of any public office having ultimate responsibility for awarding of public contracts, or to a political committee or continuing political committee will trigger this requirement. Big change, as I'll get to, but it's worth mentioning here. Big change under the Elections Transparency Act. A contribution to a political party committee or a legislative leadership committee will no longer trigger a Chapter 271 reporting requirement. I could give $75,000 to the NJGOP today, and it would have it would not trigger any type of reporting requirement for my firm whatsoever. Big change from before, where there have been cases where vendors have lost public contracts worth a lot of money for giving money to, like, for example, a county political organization. That's no longer the law under the Elections Transparency Act. I just note the definition there of contribution means any contribution reportable by the recipient under the Act, which means any contribution now over $200 in the aggregate. Many firms and vendors will avoid the Chapter 271 reporting requirement on purpose by giving multiple unreportable contributions. Not uncommon, because there's, for obvious reasons, a lot of people who do business in the space don't want other competitors knowing what their clients they have and what contributions they make. Chapter 19 prohibitory provisions. Chapter 19 very generally prohibits local contracting units from entering into a non-fair and open contract having an anticipated value in excess of 17.5 with a business entity if during the prior year that business entity made a reportable contribution to any candidate committee of any person serving in the public office of the county or municipality where the contract was awarded. What does that mean? It means if you give a reportable contribution to the mayor of the town where you're seeking an award of a contract, you can't get a non-fair and open contract in that town that year. Huge exemption for that is if it's a fair and open contract, right? Different advocacy groups, when these things come before the legislature, will go in and testify and rail against what they call the fair and open loophole, because none of this applies if you do it if you solicit the contract, regardless of its value, on a fair and open basis. You can give as much money as you want to whoever you want, as long as you do it on a fair and open basis. And of course, I'm talking about professional services, right? Another big change, as I mentioned earlier, contributions now to political party committees no longer trigger the prohibitory provisions of Chapter 19. Another big deal. If I were seeking an award of a contract in a town, I could give the maximum to the local Republican or Democratic organization, and it would not affect my ability to receive a non-fair and open contract whatsoever. Nor would I have to disclose that contribution on my 10-day form after being awarded the contract. When a business entity is not a natural person, so using those examples I gave earlier regarding LLCs and corporations, any person having an interest in the business, which is defined as 10% or more of the profits or assets of the business, or 10% of the stock in case of a corporation, a contribution by such a person, which I'll say has a statutory interest, will trigger pay-to-play requirements. And why is that? Obviously, so if you have a corporation, right, the legislature doesn't want people with an interest in the corporation going out and making reportable contributions in a way trying to skirt the pay-to-play requirements, right? If a partner with a statutory interest makes a reportable contribution, that contribution will be attributed to the firm for purposes of pay-to-play. I give an example here. A shareholder having an interest gives a $500 contribution to a county commissioner candidate on June 1st. That would bar the firm from being awarded a non-fair and open contract with that county at the January 2024 reorg meeting, because it's a reportable contribution made by a shareholder. Of course, the contract is assumed to be over 17.5. That would still prohibit you. Little variation. You could give the maximum amount to the local political party, and it would not have an effect on your ability to receive a non-fair and open contract whatsoever. Okay. Elections transparency.
Jason?
Yeah.
Real quick, that 10% control, have they really defined what, or 10% interest, have they really defined what that is? Because I could look at it in a number of different ways.
Right. So it's defined in the regulations as ownership or control of more than 10% of the profits or assets of a business. I refer to that as an equity stake. I see what you mean regarding what are profits and what are assets.
Could it be a capital account if you're in a partnership?
Right. Whatever the total assets of the firm, I see what you mean, but I would say whatever the total assets of the firm are, regardless of whether it's cash or a physical asset, if you have more than 10% in that, you're have an equity interest in the company, and you would be one of those people. Some I've seen it where some firms will have no shareholders with more than 10%. And then, of course, you wouldn't trigger that requirement.
Thank you.
No problem. So the Elections Transparency Act, it's a misnomer, I hate to say, but it really is. The legislature wanted to increase the contribution limits and do other things in the campaign finance space. And as sometimes the legislatures will do, they call the bill something that they want, that it's not, right? In order to get it, have a nice sounding name and to try to garner public support. But when this bill came before the legislature, people from all political walks railed against it, because what it really did was it jacked up the contribution limits, as you'll see. It took away the political party trigger for the pay-to-play, which is a big deal. And it did other things which are outside the scope of this presentation, which I'll just give a quick example because I handled a significant lawsuit about it, about the independent expenditures, an independent expenditure committee going out into the election square and making communications. The allegation was that the bill provided transparency because it required reporting by those committees when none was required previously. However, the thresholds and the timing of the reports that are required are not what would allow somebody who wanted to hide what they were doing to do so. But that's outside the scope of this presentation. But it's something I've thought a lot about in the last couple of months. But as I said, it significantly increased contribution limits that recipient committees can accept. Any person can now give $14,400 to your town political party committee. State party, it's $75,000. It also created these housekeeping accounts for state and county political organizations, which is a separate account with a separate contribution limit and a separate reporting structure, and the entities are allowed to pay, like the name states, housekeeping expenses like rent, overhead, professional fees, salaries, and wages out of that account. But it frees up other money to do other things in a different account. So this is something that I think both parties wanted. That's I view as sort of innocuous. As I mentioned several times, it lowered the contribution reporting threshold from 300 to 200. One thing that needs to be mentioned on that front, though, it is effective as of July 1st. So prior to July 1st, $300 was still the threshold. So a $300 contribution on June 1st would still be unreportable. After that, it's $200. It's $200 now. But that's what just ELEC put out a very timely notice yesterday in their newsletter on that exact issue. And because the business entity disclosure statements are due soon, and entities who have to file them will have to look at that to determine what contributions are reportable and which ones aren't. Very important for municipalities. The Elections Transparency Act sunsetted all local pay-to-play ordinances. So if your town or your county has a pay-to-play ordinance on the books, no longer legally enforceable. And what I recommend to clients is that they repeal those things because it can create confusion. It's not legally enforceable and there's no reason to have it on the books. It removed, as I mentioned, the contributions to state, county, and municipal political party committees and legislative leadership committees as a triggering event for pay-to-play. It also removed the same from the Chapter 271 reporting requirements. I mentioned again, a $10,000 contribution made to a county political party by a vendor would no longer trigger an obligation to file a business entity disclosure statement with ELEC, nor would you have to disclose, even if you have to file that long form that I mentioned earlier, you don't have to disclose the contributions to those committees. And that's also on ELEC's notice yesterday. With that, I know I said a lot, but I'm happy to answer any questions that anybody might have.
Hey, Jason, I'm just going to jump in and do the first poll
Sure.
that we have for your topic. Let's see. All right, so you guys should see the question up on your screen. A vendor is not required to disclose reportable contributions to which committee types been following non-fair and open paperwork with the municipal government, awarding a contract over $17,500. I'll leave this open for a few seconds and then share the results. And again, this is for participation, so please make sure you get your polls in.
So Jason, while people are voting, a question came up. Will we be able to receive a copy of the slides? They're very interesting, difficult to capture all the details in her notes.
Sure.
Slides would help fill in any gaps.
I'd be happy to. Just send me an email. I'll throw my email up in the chat.
I think we could probably also send them out. Katie, you sent out a recording?
Yes, we're recording this session, so as long as it's all right with our presenters, we will send a recording of today's webinar to the attendees, just so you can rewatch. And
Oh, sure. Yeah.
yeah, so you will all get a copy of the recording as well. All right, I'm going to go ahead and close the poll.
Another thing I'll mention about the Elections Transparency Act too, from an enforcement perspective, not really something that towns will deal with, or vendors really, more the political reporting entities, but the Elections Transparency Act reduced the statute of limitations for ELEC to bring an enforcement action from 10 years, which was ridiculous, to 2 years. That was there were pending complaints that could have been significant against state level political entities at the time the bill was passed, and after the bill was passed, those complaints were outside the statute of limitations. So some cynics would say that the legislature did what they did so that state level political entities could avoid potential liability. I just saw the poll result.
Katie, you want to throw that back up?
Sure, yep. Okay, you guys should be able to see that now.
Vendor is not required to disclose reportable contributions to which committee types when filing non-fair and open paperwork with the municipal government for contracts over 17.5. The correct answer by most people is political party and legislative leadership committees. If you give the maximum amount to your county organization, and if the county gives you a non-fair and open contract, you don't even have to put it on the form. That's another thing to mention too, but municipal, I've seen a lot of our municipal clients, not so much at the county level, but definitely the municipal level and definitely authority clients, public authorities that have not yet revised their pay to play forms. Still has the old language on there. The old number, still has it at $300 versus $200, still has, the political party. So that's one thing that, you can take back to your clients and your employers is to revise the pay-to-play forms to reflect current law.
Jason, how would that have impacted reporting to a town when the threshold changed during the year?
So if you ordered a contract at the reorg meeting this January in 2024, your forms the old forms will say you have to report any contributions over $300. Obviously, that is only through July of 2023. After that date, when the threshold changed, it becomes $200. So it's really not $300 anymore for the entire year. So if I made a reportable contribution on December 1st, if I made a $200 contribution on December 1st, that's not a reportable contribution. But if I made a $300 contribution, it would have been. Though it wouldn't. That same contribution would not have been reportable earlier in the year.
So a fiscal year town whose year ended on June 30th would have been subject to the 300, and then afterwards would have been subject to the 200.
Yep, that's absolutely right. I'm happy to forward the. I'm assuming that not everybody is on ELEC's email list like I am, so I'm happy to forward their newsletter, which is always very informative, but it has information on that very topic.
Yeah, we spent quite a bit of time early last year reading through the pay-to-play rules, only to have the law changed shortly after we thought we were almost getting a handle on things.
Yeah.
And realized that now again we had to start all over again.
Yeah. And you know, one of the things that, not to give a plug for my firm, but one of the things that we do for public clients and private clients is we advise on pay to play. So if anybody needs any advice in that area, feel free to contact me anytime.
There's a couple of questions that just popped up in the box there. First question is, how do we sign up for the ELEC newsletter?
If you go on the ELEC website, there is a sign up form. You just plug your email in. I can throw that up in the chat if that would be helpful to everybody.
Okay. And the second one was, for a nonpartisan town with an election every 4 years, is the limit of $200 total over the term of the 4 years?
In a nonpartisan town with elections every 4 years, is the limit $200 because there's no primary, right? Yeah, that would be $200 per election. Okay. So if there's one election every 4 years, it's not $200 every year.
Right.
It's $200 for the election. Right.
Yes.
That's a great question. Let's see. Are there any other questions in the chat?
I don't have any other questions in the chat there.
Well, I'm going to put up the link in the chat to the. Well, I think I'll put it up in the chat. I think my ability is just to communicate with the hosts and the panelists. So maybe.
Yeah, if you put it up there, I think Katie can share it with everyone.
Yeah, I think I can as well.
Okay.
Katie controls all things.
It was a real pleasure. That's right. It was a real pleasure talking with everybody. And
hey, Jason, let me do your second poll just before we change topics. Everyone should see the second question here. Based on the updates to the campaign finance law, the contribution threshold was changed from $300 to blank. And I'll leave this up for a second and then share the results for a minute.
Hey, Ray, I don't know if you're still around or not. I didn't know. I know you had dealt with this a little bit as well. Was there anything that you wanted to add? Not to put you on the spot, but was there anything that you can add to this, or?
Not to put you on the spot or anything, right, John?
No, not like that. Yeah. It's around.
I was going to chime in. I know that the Division of Local Government Services did do an LFN on this. I think towards the middle or end of last year, and at the bottom of that LFN, there were a number of links, two of which I think would be pretty important to the listeners, because they had the updated forms that the municipalities would send out to their professionals to be filled out, with most notably, the poll question there, that the threshold changing from $300 to $200. I know I got a number of forms at the end of last year that still had the $200 threshold, or that still had the $300 threshold on some of the forms that were sent out from some of the municipalities that we work with. So I would encourage everybody to look at that LFN and go specifically to the links at the bottom to make sure that all of the forms that they're filling out have the correct dates, the correct thresholds, the correct information, because it is a pretty big change, and we want to make sure that everybody's filling out the proper forms and doing the right things.
I just threw up the link to the ELEC sign-up form and to the local finance notice that you just mentioned, Ray, into the chat.
Thanks, Jason. I'll send that to everybody right now.
Katie, can you also share Jason's bio?
Yes,
I know
I
it's a
will
little
send that.
further up top.
Yep, got it. Great, everyone should have those now.
Thank you.
Yep.
So Jason, I just also wanted to publicly thank you. You worked with John and Ray for us last year with Pay to Play, and it was very helpful. I think with all the pain we went through trying to understand it ourselves, you made it much easier for us to understand and really for all of our partners to understand. I appreciate it.
Well, my pleasure. Happy to do it, and it was a pleasure working with you. Pleasure being here today. Thanks for inviting me.
Thank you.
So Katie, since you shared that elephant, I was just going to share my screen real quick and show everybody where exactly I was talking about. That's all right. I can do that. I think it's that one. So can everybody see that?
Mm-hmm. Yes.
So the forms are so this is the LFN that was put out last year by the DLGS 2023-14, and towards the bottom here, if you click on that link, a Word document eventually opens. There we go. So here's the first form that they've updated to be sent out. I think the only thing that would need to be done is update for your municipality and county.
Right, we're still seeing the local finance notice.
I think you have to reach
really?
to the Word doc. Yeah, sorry.
All right. Well, at least you know where the links are. I don't want to spend too much time on it. And then the other link is this business entity disclosure form. So these two links are going to be the ones that I think, and this resolution as well, are all the different forms that need to be updated for a municipality.
Thanks, Ray. So are we ready to move forward to the next session?
You are, but actually being in the next session, I thought it'd be interesting to open up with that. Somebody may have read about this new Change Healthcare's the hack that happened. They were subject to a cyber attack, and the statement here is that Change Optum touches almost every hospital in the United States in one way or another, meaning it's going to impact the reimbursement rates on hospitals. If you go for a prescription, which I'm waiting for one this morning, it affects coupons, the discount rates. It's disrupting the entire network nationwide. It just brings home the fact that the cyber attacks continue to happen, and they go for certain areas. But this one company it touches almost everything across the entire United States. What it also says is that it affects the collection rate of hospitals. So they may be 90 days in arrears on getting any payment or reimbursements. So it's a very serious attack. Not that meant to be a sobering moment, but it just happened. Want me to start with intros? So our next speakers, we're going to be talking about cyber risks and internal controls. It was primarily related to banking relationships, wire transfers, payments, ACHs. We have with us today Pauline Contaminolis, Chuck Kucha, and Paul Yowling. Pauline Contaminolis, so we figured out this morning, I told her that I've known her for 21 years. She corrected me and says, no, it's 31 years, John. So I said, thank you, Pauline. I know I'm getting older, and she just reinforced that. So Pauline is responsible for PERMA's financial staff that maintains the general ledgers for joint insurance funds. Pauline oversees the securing and processing of data in order to prepare the monthly public reports. She is responsible for filing the regulatory reports for PERMA as well. If you've ever worked with Pauline, she is spot on. She doesn't let you sway from that line, and she keeps you honest, which is great because I think I've given her a couple gray hairs, although I don't see them on the screen.
I'll die. Hair dye is amazing. Thank you, John.
You're welcome. So Pauline is a CPA in both New Jersey and New York. She was employed by public accounting firms for 11 years before joining PERMA in 1993. So while at PERMA, she developed the general ledger accounting package, which is now considered standard for the joint insurance funds in New Jersey. She also has a Bachelor of Science in Accounting from New York University's Stern Business School. As Pauline. Hello, Pauline.
Thank you, John.
Even though I drive her nuts, she still says she likes working with me. Paulie Alley, who has agreed to join us today from the banking perspective. So Paul is currently the Senior Vice President, just recently promoted, Senior Business Development Officer at Connect One Bank. It is a $10 billion institution with offices in New Jersey, New York, Long Island, Astoria, and Florida. With 13 years in banking, he brings extensive experience, having spent 8 years at Connect One, following his role at the Bank of New Jersey. Prior to his banking career, Paul was a partner at CNL Commodities, specializing in coffee, sugar, and cocoa trading at the, Paul, you call it NIBOT? It's called
NIBOT, New York Board of Trade.
For 25 years. He was, interestingly enough, present at the World Trade Center on 9/11. So we're happy to still have him with us. And
that's why I have gray hair.
In his personal life, though, Paul has been married to his wife, Kathy, for 32 years. If anybody knows Paul, she must be a saint to have survived 32 years. He is a proud father of 2 children, Christina, 31, who recently got married, and Paul Jr., 27, who is a real estate agent in Hoboken. Paul has been a resident of Fort Lee for over 40 years, so he was there for that whole traffic jam. Paul is deeply involved in the community through volunteer work, including serving as the president of the Fort Lee Board of Adjustment and vice president of the Fort Lee Little League and Soccer League. He's been recognized for his contributions, notably receiving the 2008 Bergen County Boys Soccer Coaches Association Contributor of the Year Award. That's a mouthful. Additionally, Paul received a special recognition day from the town of Fort Lee in 2009 and was named the 2010 Bergen County Volunteer of the Year. In 2019, Paul was honored with the Chairman's Award of Outstanding Performance at Connect One Bank. Next one. Affectionately referred to as Mr. Cooch by people that know him well from his Lodi years. He's grinning now because I asked him before. So Chuck has been.
You never know what John's going to do when he introduces you. Go ahead, John.
So Mr. Cooch has been in government for 47 years. Wow, that's a long time, Chuck. Chuck holds the certifications as a CPA, a registered municipal accountant, certified municipal finance officer, certified public manager, registered municipal clerk, qualified purchasing agent. I think we're done at that. Chuck is the past chairman of the Municipal Excess Liability and the Bergen Municipal Employee Benefits Fund, and is currently the chairman of the Mel Legislative Committee. He has been an adjunct professor for William Patterson University and Fairleigh Dickinson University as an instructor in accounting and budgeting. Chuck began his career in municipal government in 1977 at KPMG, performing audits and conducting consulting engagements for various federal, state, and local governments. In 1991, he was appointed the borough manager in the borough of Lodi and subsequently served as a borough administrator for the borough of Saddle River for 21 years. He is currently the township administrator and also CFO for the township of Little Falls in Passaic County. I think those are our introductions.
Okay.
Thank you.
You're welcome.
Okay, thank you, John. So we're gonna share screen now, Katie. Let's see if we get it.
So while you're waiting for technology to catch up, Chuck has also been a fireman in Bergen County for how many years, Chuck?
25.
25 years. He's also an EMT.
I was an EMT too. This is the fruits of a misspent youth, John.
And a Marine.
And that was really misspent. Okay, so at this point you can see the first slide, I believe. And so we're going to talk about internal controls and payments and wire transfers. et cetera, and ACH payments. And since we created the cyber GIF, we've developed best practices. And if you are a member of the cyber GIF through your municipality, these best practices are not only best practices, they are required. It all revolves around internal controls, and I would ask Bud and Ray and John if they want to jump in and talk a little bit about internal controls, because we've been dealing with internal controls for years and years on a financial basis. But the basic definition is yeah, okay, I'm going to get better at this at some point. There we go. No, that's not right either.
That's all right, Chuck. You're getting ready to retire. You don't have to get better.
I don't have to get, I still got to get better. Internal controls are policies and procedures implemented by an organization to ensure operations are efficient, secure, and activities are compliant with the applicable laws and regulations. Something that we all thrive for, and your auditors review on an ongoing basis. I'll pause here. Bud, any of the auditors want to jump in here and on any of this before I move on?
I was going to jump in a little bit later, Chuck, but obviously I agree about the importance of internal controls, policies, and procedures, and not only having them in place, but testing them and making sure that they're functioning the way they're supposed to be functioning.
But I've always looked at internal controls as, when you look at a process and you're like, it shouldn't be that way. One of the ones that I always talk about is when I first got to Wharton, I had to go reimburse myself, and I was looking at the voucher, and I was the vendor declaration, I was the department head, and I was the CFO, and I signed in 3 spots. And it just didn't look right. So I went to my finance committee and said, hey, this should never happen. In the wrong hands, somebody could abuse this. And we changed the policy. If I was getting reimbursed for something, I could only sign one place. We had to have somebody else review and sign it in the other places. But I think in internal controls, when you look at something and it looks like it could be broken or taken advantage of, and you find a way to control that weakness.
Right. Does it pass the smell test? Does it, look reasonable? Right. You obviously would have too much control in that situation, John.
Right. So we fixed it.
Right. And it was an easy fix, right? It's not like you had to go out and hire somebody.
Nope.
No. And back in the day for Bud and I, it was relatively easy because it was all manual paper. And we could do it easily. But now that we're dealing with cyber, the challenge is a little bit more. So just a couple of quick statistics. The cost of cybercrime is over $1.5 trillion per year in the United States. 43% of the attacks are on small and mid-sized entities. And the highest cost of the data breach in New Jersey local government was almost $7 million. I don't think anybody really wants to be on that conversation. But let's not forget that fraud exists. I want to give you a little example, because this is ongoing. This is just recently ongoing, and it's related, but it's old-fashioned. So you've all seen settlement agreements, I'm sure. Here's the names have all been changed, by the way. Settlement agreement for a general release of a claim between Mr. Jones and County of Erie. The settlement terms are included in the agreement, therefore claims in full satisfaction of all the claims asserted. Well, the attorney who did this, being very, very efficient, included in the settlement agreement the payment terms. He also included the wire instructions. First National Bank, there's the ABA, the claims fund, and the claims account. So the big thing that's wrong with this is one of our other favorite topics, which we've talked about here before, is Oprah. So the settlement was Oprah. And when you Oprah the settlement and you get all that wire information, you now have the ability to create things. So the third party that took that information obtained from the settlement document, created an Erie County check from the information in the wire transfer, deposits in the bank the account in the name of Joe Jones, which was a fraudulent account. The receiving bank contacted the county to see if it was a legitimate check. The county approved the check as they were aware of the authorized settlement agreement. Okay, so why? Internal controls. In Erie County, wire transactions and checks were not processed and authorized in the same department. The outcome, luckily, the receiving bank held the check because they didn't feel the check presented was valid, and they continued their inquiry into Erie County and found that the wire had previously been executed in accordance with the agreement. So even though we're going to talk about cyber, the old-fashioned check washing and all the rest of that stuff, it still exists. So you got to be prepared for that and be ready for it. Here are some of the requirements that we've developed on the best practices with regard to the cyber GIF. And the first one I want to talk about is presumptive liability. So presumptive liability really is that the bank has a responsibility to refund payments when they are not done properly. In the UCC, it permits the receiving bank to escape liability when the customer did not authorize the payment order if the bank can prove these 5 things. They have to prove that there is a security procedure. The security procedure that's been agreed upon by the bank and by the customer is commercially reasonable. The bank processed the payment orders in compliance with the security procedure, and the bank processed the orders in compliance with a written agreement instructions by the customer. The bank also has to accept the payment order in good faith. If the bank cannot meet the 5 elements, then the bank is presumed liable. The risk of loss associated with the unauthorized payment or fraudulent wire transfer initially falls to the bank. That's the presumptive liability. The risk can shift to the customer when and only if the bank proves its good faith compliance with the commercially reasonable security procedure. But it can shift back to the bank when the loss is proved by the customer to have been caused by an imposter or allocated in the bank agreement. I had to actually go look at my agreement to make sure we had some provision in this with the bank. It's in the boilerplate. So I would suggest to everyone, if you're dealing at that level with the banking industry, you go and you make a good faith effort to make sure that that's happening. And I'm going to ask Paul if he'd like to comment on any of this at this point.
Yeah, well, thanks, John. Yeah, we're seeing a lot of this. Obviously, it's increasing daily. Where with fraud, especially, we have some municipalities that were mailing checks and the checks were being stolen. They don't catch it till later on. They're washing the names out and using something else. We have emails going out to some of our clients that these thieves steal, and then they send an email to the county or to somebody else saying that they're looking for a wire payment, and it's a completely different person. They're saying they have a new phone number, new everything. I mean, they're just getting so much better at this. John knows that we talk to them every day whenever we see any fraud or we think there's fraud, and they're on positive pay on everything. Every one of their accounts has positive pay, positive payee. So we're in constant touch with them in all our towns, but they still get through. I mean, all you need is one person that's assigned around the account to do something and send something the wrong way. Even and we're catching. We do try to help and we try to get it back. Sometimes it takes 60 to 90 days for the other bank to give it back because we're fighting them for it also because they're the ones who took it under a different name and a different account number. But it's getting worse, and we're just trying to keep on top of it. We're making everybody go on positive pay, positive payee, and they have to check. I mean, sometimes they don't even check the positive payee. Are you a guy, Chuck? You're on positive pay, positive payee?
Yeah. Actually, I was just going to ask you, just describe the difference between positive pay and
positive pay. You're seeing the check daily. You go online. You go on in the morning. You see the checks that are coming in, the number of the check, and how much the check is. But positive payee, you just hover over with your mouse and you see who the check was actually made out to. So that's where you really have to look, because we just had one for 37,000. The girl that came in on a Friday, the girl saw the check number, the amount, approved it. The vendor called them up 2 weeks later and said, "We never got your check. We usually get it on the 12th." This was the 30th, and they realized that the check was signed by somebody in Indiana and taken, and it was a mobile deposit. So they never looked. If they would have looked at the payee, they would have found it. So now we're in the process trying to get it back from TD. And I think they realized it was fraud, so they are holding it, I believe. But that's the hard part, is if you don't know right away, and positive payee is a lot easier because you can just look at the name, and if it doesn't look right, you get it. But a lot of times they'll change the check number, but now they're just not even changing the check number because they know they're looking at that also. But you really should be on positive payee. It's a lot better to see who it's made out to.
You know, what's funny is we constantly look for more technology to cover what we're doing here to protect us. And I'm gonna let Chuck say his quote, because what's the best defense?
What's the best? You mean you beat
Low
high tech by low tech.
I like the best way to fight high tech is low tech.
To low tech. You're reading my slides later on, Joe.
Oh, I'm sorry. I didn't mean to
okay.
jump ahead. I've heard you say it so many times, I had to bring it out.
If I could just add something, this is Pauline. First, I want to correct Chuck. When Chuck said that his EMT happened to not be productive, he was wrong. He practically saved my life once. I had a health emergency. He happened to be at PERMA, and if it wasn't for Chuck, things would have been a little bit different. So I'm going to publicly say thank you, because I never did. I've always said so. That training helped me very much.
You're very welcome, Pauline. That was very nice of you. And
now, with regard to, I wholeheartedly agree with Chuck when it comes to beating today's technology, that the good old-fashioned way works. All of our joint insurance funds do have payee positive pay. And the third-party administrators, as well as PERMA, who issues the checks, we transmit a transmittal to the bank, and with all the information of the check, and automatically that goes into their system. So it's my understanding that it's an automatic, and the following day, or as these checks clear, I should correct myself, they are processed, and if there is any discrepancies, we get a notice in the email that will tell us if there's a discrepancy and that we have to approve it. We being a signer. Now, PERMA also has the rights on certain administrative accounts, not that we're signers, because we heavily believed and always did believe in separation of duties. So we don't have any rights to any of the transfers or anything like that, but we have the right to approve it because we issue the bills list. The pay positive pay really came to light. It was a little bit after COVID, when, again, as Paul mentioned, I think in his area, they were stealing bags and bags of, it was an employee inside a post office that was stealing bags and bags of letters, and obviously taking these checks and trying to clear them. So as with the rest of my panel, I totally agree that pay positive pay is an absolute. And they also have positive pay for ACHs.
Yes.
Not just for cutting checks. So that doesn't mean that you should be you only have to issue checks, but they have ACHs. And one last thing that I will add is the good old-fashioned confirmation when it comes to wires and ACHs. And I know that Chuck will bring it later, so I'm not trying to steal your thunder, but I think it's very, very, very important, especially when you have large wires and transfers, that you follow up verbally to an extent, as much as you can, verbally, and not by a phone number that you may have received from an email. You have to follow up verbally with the phone number you know of and that you have on your system, because you'd be surprised how these bad actors can be so suave.
Absolutely, Paul. Absolutely, Paulie. Because we had that also. We had a number of clients that, like I said, with new vendors, and they'll say, "Call us on this number. We're doing work on our old office. We're using a new number," and they don't do it. They don't call. They don't call the person they know, and they just send out a wire.
Yep.
Okay. Well, thank you. Okay, so the second point on the cyber best practices has to do with confirming receipt of best practices with your CFO. These are no exception guidelines for wire transfers and ACH payments. Third item has to do with the cash management plan. Every year we all adopt a cash management plan, and we believe that the wire and ACH and positive pay should now be included as part of the cash management plan, so we can keep our governing bodies apprised of what we're doing. And then the last one is to establish a specific wire transfer and ACH payment requirement, whether that include restricted amounts or restricted days or number of days, but you got to consider that.
Chuck, you want to talk about my restriction I did when I was in Wharton?
Oh yeah, go ahead.
So in Wharton, we were debt free, so we didn't have the need to do multiple wires during the year, maybe one or two. So when I would open up a banking relationship, my instructions to the bank were require me to show up in person and produce my license to prove who I was. That was old school or low tech. So since I only did 2 or 3 a year, for me, the inconvenience was worth the security of knowing that somebody couldn't access my account.
And it worked.
It did work. It wasn't an inconvenience, it was. But we would plan ahead. I would email the instructions ahead of time so they can complete the paperwork, but I showed up in person to validate what my request was.
So now, as the chief financial officer for the county of Bergen, I would assume you don't get to do that anymore.
No.
So now what have you done?
We get a lot of phone calls. A lot of confirming phone calls. I get a lot of sheets of paper on my desk saying, here's the instructions that we just sent out. It comes from somebody I know. I don't accept emails from my staff. I also said to my staff, if you get an email from me requesting wire instructions, it is not me. I would not do it that way. And we go low tech inside the office. It's a lot of paper pushing, but with the amount of money we push through that county, we've got a $780 million budget. We process $1.5 billion in cash a year. I'd rather be extra secure and knowing we don't lose any of it.
Agreed.
So we definitely do confirmations on everything.
So the banking, and Paul, jump in here if you want. The banking institutions have indicated to us that ACH payments are more secure than wire transfers. So we've made the following requirements a part of your wire transfer and ACH policies. So now we're back to internal controls. At least 2 individuals, one in the finance department, one in administration, to authorize and execute and confirm ACHs and wires. One in the finance department should have the appropriate level of responsibility. These are not jobs for administrative assistants. People with knowledge and responsibility need to be approving and authorizing these items. Freeform wire transfers. We've decided that, and we'll tell the story in a minute, that freeform wire transfers being allowed create a little bit of a window that allow hackers to play with funds. If you work from templates only, there's a process of preparing the template and getting the template approved, which puts another process before you can wire. I'm going to ask Pauline to start her story of a municipality that we've dealt with where they had a rather large loss. So go ahead, Pauline, you start and I'll fill in.
Sure. There was a municipality that had several wire transfers over the course of about 5 or 6 business days. I think it was 5, but it overlapped over a weekend as well. And they were quite high, each one of them, but the bad actor was very smart in doing the lesser amounts, I think, at first. And they went to several areas. Some of them went to California, some of the wires went to China, and then I think it was North Carolina. I don't remember the third state, but it was 2 wires, several wires to 2 states, and then also to China. So that brings in, and I know on the JIF end, on the joint insurance funds, we never, ever, ever do international wires. So we have controls, in place where we are requiring right now that there is a control that you have that you are not allowing international wires, period, because that there is no need for that. This was not caught until 5 or 6 days later. And there were certain controls in place, but not as many as should have been on both ends. Obviously, I can't discuss the case any further. I am an adamant believer, and I understand that in certain situations it may not be doable, but I do feel that the responsibility of the CFO or the treasurers is to go into your account every morning and look at the overnight wires and see what has happened overnight and if there's anything unusual. And I do understand that may not be applicable or able for every single CFO to do it. And then there's ways that we can discuss to betterment it. But it's the good old-fashioned intervention that can stop.
So part of this story is that when the banking institution sent some information to the CFO, it was unencrypted. And I feel that putting information in which allows you access in emails, one that are unencrypted, is just not acceptable. I think a lot of the banks have gotten away from that at this point in time. I even tell my bank, write it down on a piece of paper and bring it to me, because I don't take it in email. Paul, you're nodding your head, Paul. You want to say something?
No, I agree. Well, all of our email, if there's anything in there that even if it says account on it, it automatically goes encrypted and they have to sign in to get it. Any words, there's certain words that we put in our email and it will pick it up automatically, send it out encrypted. We always do secure. With our wires, John has, they have a wire token that, soft token on their phone, so they can't send out a wire until that number changes. It just changes every 30 seconds, so that has to go in. That's another one. And if there's a big wire, we'll even call them up and say, we just saw a wire coming in. Did you initiate it? Just to make sure it's okay.
A little inconvenience, but it's a good inconvenience.
Right. I don't mind. And I tell them in the back office, I said, I don't care. I'll call them. It's better to send it to me and let me call them than not doing anything at all.
No, it's like on your personal credit card. When you use something and it looks weird and they call you, it says, is this really you? It's the same kind of thing. It's looking for those weird transactions.
And you don't get to complain about your wife, John.
Never do. Never do in public. The other one that we were talking about, Chuck, the other day when we were preparing for this is there was a wire from another GIF. It was a manual wire. It was not a template, and it went to the wrong place. It went someplace in Texas.
Oh, right. That was just a typing error.
It was a typing error, not cyber. But if we have these redundant approvals and reviews, it would have prevented that. Now that the person responsible for that was losing their mind because they're usually spot on. It was just one digit off and it went to the wrong location. But
we did get the money back.
Absolutely.
We did, but it was one of those things that it was, oh my gosh, if there had been one extra set of eyes on that transaction, it may not have occurred.
It's true.
And that occurred several years ago. That was in 2013.
Yes, it was.
Yeah, it was in 2013. So these extra securities should have always been there. Of course, they become more serious now. And one thing that, Chuck and I have discussed several times is alerts on a different communication modem, whether it's a phone call, whether it's a text. But when you have any kind of alert coming through in the same venue that you've used to make the wire, well, that's defeating the purpose, because if somebody has gotten into your system, they also have access to your email. So therefore, it's required in our best practices to have multi-factor authentication. And I know that Chuck will
we're coming up with that next.
Yep.
But Pauline makes a good point. What we've seen in some of these situations is that the hackers, when they get control of your email process, they flag responses from the bank, say, into your junk mail, which I don't look at my junk mail every day. So the response from the bank, if you're using the email platform, goes to junk mail, you don't see it, and then they respond back to the bank on your email. So I would suggest, and I've been doing it lately, every once in a while, I take a look at my junk mail.
So Chuck, I've got a personal experience where I was dealing with somebody that had a financial question, was not part of the county, and I had just gotten off the phone with them, and I said, "We'll just send me the information." They emailed me the information. When I went to go open the file they sent me, knowing it was coming in from them, so why would I question it? Because I just talked to them. It asked me to relog into my Windows account or my Microsoft account.
Mhm.
And then we change our password so often that you have to relog in all over the place. So it looked just like that screen. So I'm logging back in. It's not letting me in. I'm getting frustrated. And so I said, I'll get to it later. My IT staff identified it, said there's some weird activity on your account. So they completely disabled my account. That was 10, 15 minutes later. Inside that 15 minutes, they changed the filter on all of my emails so that all internal emails went to a special folder that was hidden.
There you go.
Had emailed at least 15 people within the county that I transact with routinely requesting financial transactions, which is why we said, if I ask you for something, I'm gonna come and give it to you.
Mhm.
But that was inside of 15 minutes that they created a filter and started hammering everybody to look for transactions all over the place, reimbursements, checks being issued. Nothing happened. We were able to shut it down, but that's scary how quickly they can take over your entire account.
It's true. Absolutely. So we're, just to recap on this, we think that using a template makes a difference because we get another layer of approval in the process. Then what Pauline talked about, we have two forms of verification and multi-factor authentication. It can be verbal, communication can be telephone, it could be phone number, text, or another email. There should be limited email exchange to confirm wire transfers. And second factor can be text, as we said. We should never use specific information relating to an actual context of the transfer. So when I do mine, I execute the wire, and the first thing I get is that first text that comes back from me from the bank. Enter your passcode before they'll accept it. When I enter that, then I can set the wire up, and then I get that second text that says, go and check your status. When I go and check my status, that's the time when my confirming person now has to confirm the email, the wire. Once that's done, then we get this email back. Your wire has been in the amount of 107,000 was successfully sent to Depository Trust Company, and they specifically take it. So that's the manner in which I work at the local government level. Knock wood, it's been well and good for us.
Hey, Chuck, before we move on, there is a question. It says
ahead.
that the CyberGIF framework requires compliance with JCMI best practices.
Yes.
It says, I cannot find them on the CyberGIF website. Will they be distributed today? I'd like to have a printed format to distribute to my clients.
Yes, Pauline, are they not on the website? I thought they were.
They're in the policy and procedures, I think, and I think it's a link. I'd have to speak to Ed Cooney, and I'll follow up on that and find out if we can put them on just separately, actually, which would just be much easier access as opposed to a link.
But I mean, they're all basically in the slides. I can send Katie the slides, and maybe you can make them available to everyone
That'd be great. Thanks,
when
Joe.
we're done. Okay.
They should be on the cyber website, though. Thank you to whoever asked that question.
Somebody's asking, go back to the previous slide, which.
That was a while ago, John.
Okay, sorry. I'm a little slow here today.
But no, are we good?
We're good.
Okay, we're moving forward. Okay.
Chuck, before you proceed, Tom Rochelle did respond, said that they placed the cyber documents in a members only section of the website.
Oh, okay. Well, very good. It's nice to hear from Tom.
No, not always.
Yeah, it's good. Okay, so we talked about creating templates for transactions. We want to name the person we spoke to if we're doing that. including the recipient, vendor, title, the telephone number, it's all here, to individuals from the covered entity to be confirming and authorizing. We talked about that. And we talked about receiving and verifying the transaction by the receiving bank. Now, I will tell you that for most of us that pay municipal debt, DTC will not confirm payments. So it's just something that we have to live with. So the memorialization of the transfer, I use that email return back to me from the bank as the document, and then I give that to my clerk at my finance department to make sure that they have it filed. The verbal confirmation within 24 hours for the receiving vendor. I know on ACHs, when we're getting them, I usually get a call from someone who's sending it to me, asking me. We haven't done it in the past, but obviously it's something that we're going to start to do because we are using more ACH to make payments. This last item here is really set for municipalities who don't use a lot of wires. They may require a policy restricting the frequency of the wire transfer to infrequent or emergent matters and real estate transactions rather than for routine payments to vendors. If you're not using a lot of wires or if you're not using ACHs, you may want to have some restrictive policy to protect you with regard to the bank, and that's going to bring us to talking about blocks. You can obviously limit the dollar amounts of your wires and ACHs based upon your templates, and we want you to disallow blocking on permissions for all international wires. I know there are some schools that tell me that they have the occasion to use international wires when they're doing exchange student work, and that's very specific. So I think that's got to be handled very cautiously. Okay, blocks and alerts. So I know that I have them set up. I have them set up for especially alerts for changes in users, passwords that get missed 2 or 3 times. You can go down a list with the banking programs, and Paul, if you want to talk about all the things that you have available, anytime one of my users does something, I'm going to get an alert if they bump into those parameters.
Yeah, well, if they go in a couple of times, they'll be locked out. Then they have to call us, and we will reset the password for them. As far as wires, that's if they have a problem with the wire, we'll shut down the wire if we see numbers going in that are not right. Like I said, most of our clients, I say 90% have soft token, so they have to put in their 8-digit passcode and then wait 30 seconds for the new token number to come up, and then it goes in. If they do that wrong a couple of times, they'll shut down. So they can't send out a wire without that token. If they're doing it that way, if they're going to do it on a sheet where if say the guy's out that's doing the wires that has a token and they want to do it manually, they'll send us a form. Our back office will call and they have to tell us exactly what's on there, but they'll call the person on the number that's in the bank, that exact, to the say the county, they'll call John, who's a signer on the account. It has to be a signer on the account that's going to confirm it. But very rarely will we do a over the phone transaction unless we know the person and they tell us exactly what's on that, what they sent.
Okay, good. And you spoke about payee positive pay earlier,
right?
Which we all agree, I think, that this is a much better way to go.
Yeah, like Pauline said, if you have certain vendors that you send out all the time, you just download that file and you would have to decision that unless that the name is different than what is on that file. Then you'll get a notice that you have to decision it. But mostly, if you do it with the same people all the time and that comes in through, you don't have to decision. It'll automatically be paid.
Hey, Chuck, Joe Kunz identified that they have positive pay in his town, and it's notified them of some issues in the past.
Yeah, I'll just jump ahead a slide. When I get one that's not in the list. You know how this happens, right? There's a file that you send to the bank, and they process the checks that they receive against them. And it could be for many reasons. But this is the document that I get back in an email telling me, let me know if this is a real expenditure on your side. And it's very efficient. I mean, as long as your file to them is good, generally speaking, they pick up any anomalies very quickly.
It's worth the pain. I mean, you have to go in every morning, but it's worth it for no fraud.
Yeah, I would agree.
But positive pay is not automatic, right? You have to request that, Paul?
Yeah.
Well, yeah, you're on positive. Yeah, we're doing positive payee now. Where it's all in one. It first came out as positive pay, and then we added positive payee that you can see the payee on it. And so now everybody who's getting on it is switching. I think you guys are on a positive payee already.
But I think it's important for the audience to know that, or the participants, that
Yeah.
they need to check with their financial institution to make sure that they've got both active.
Right. Well, yeah. When you go online, if you take your mouse, I think you can tell right away. If you take your mouse on something that comes in that you have the decision and put it over that check, if the name doesn't come up, then you don't have positive payee. You just have positive pay.
Right. So that extra layer of protection is good. It protects
it's absolutely. Yeah, like that one check I told you about was $37,000. If they would have put the mouse over that check, they would have seen that it was made out to a person's name in Indiana, and knowing right away it was taken, that it was fraudulent. But they didn't do that, so they decisioned it.
And that was a wash check.
That was a wash check. Yeah, they used the same number and everything. The only thing they changed was the name.
So you just for the benefit of everybody who's listening, do you want to tell them what a wash check is?
Well, yeah, what they do is they'll take a check, and now they're doing it in the post office. They just had somebody in one of the towns, because they're giving their mail to the post office, and somebody in the back office is taking checks, washing it, changing the name on it, sometimes changing how much it is, adding a different account number on it, not account number, a different check number. Like they'll go, if the check's 1,022, they'll start it at 4,022. So so they know it's not going to be a duplicate, and they'll make 3 or 4 checks off of it. And then they'll go to a check cashing place, or we see problems like I see a note here about TD. We have a lot of issues with TD where they accept checks like that, or they're going to a check cashing place.
But Chuck, there's another question. It just says, refer back to Tom. Can you outline specifically where the documents are located in the website? Is that going to be part of your slides later on?
Unfortunately, I did not include that, but we'll get that information to Bud, and then.
Well, if I could just say that that information is for members only. So that's why you have to have a member log into the cyber GIF account on the web in order to get that information. I think, Chuck, if you recall, that's what the committee agreed to. It's for members.
Yes, I do recall that, but I will tell you that the best practices are all in the slides here for your use.
Okay.
Okay.
So if it's somebody that's representing a client, they have to go back to the client to get it.
Yeah, if they're a GIF member, if they're a cyber GIF member.
Correct.
Yes.
I think that's the answer then.
So, you know how you get a can of mixed nuts, and you get lots of peanuts, and you get lots of almonds, and there's just a couple of cashews. So if you take anything away from today, here are the 3 cashews that you're going to take away. Establish a strong internal control system. The banking system has to be part of that internal control system now. And as John said, you beat high-tech crime with low-tech controls. So if there are any other questions, happy to take them.
Hey, Chuck, I just wanted to add in real quick. I always like Bill Homa's lines that he never had a cyber attack or never had his typewriter hacked.
That's true.
Yeah.
That's true. Well, if you like that one, I'm going to give you the last one. One final thought. You don't have to be crazy to work in local government in New Jersey, but it helps. There's my reach number if anybody wants to have a discussion. My reach information in Little Falls. Please feel free to reach out if you want to have any discussion or talk about anything else. And thank you very much for having us.
So Chuck, to follow that one, I say I don't suffer from insanity. I enjoy every minute of it.
Thank you, everyone.
Thank you.
Thank you.
So-
Have a great day.
We
Before
have
we
one
move
last
on-
question. Another issue with fraud is mobile deposit of payroll checks, but checking your accounts regularly is good. The mobile deposit's a problem all around, but Paul, are you seeing anything with that?
Yeah, we have. I mean, what happens is some people are doing a mobile deposit and then they'll deposit into their bank account somewhere else. So a mobile deposit, they'll mobile deposit. But now most banks, I don't know of any bank right now that you don't have to put for mobile deposit only on the back of the check before you do a mobile deposit. This way you can't do it twice. If you do deal with a bank that doesn't make you do that, I would check it, because that's important that you have to. So this way you can't deposit it afterwards because you already put mobile deposit only on the check. So it's got to go through mobile deposit.
Okay.
But and I know we do it. I deal with a few other banks that I have my own stuff in every one of them. If I make a mobile deposit, I have to put that on the back of the check, so it can't be redeposited. But in the beginning, before they made you do that, they were depositing it multiple times, and we had employees doing it to their company, and they found out 2-3 months later. But they did it, every week they would deposit it twice.
No. So a comment from Greg Franz, who says it gets more crazy every year. It's not fun anymore.
Paul, if I could ask you though, so if you have pay positive pay, does that count? Would that trigger a multiple deposit because the same check is being presented to the bank twice?
Yeah. If the person gets that check, yes. But that's why sometimes they'll change the number on it if they wash it, so it doesn't get in there twice, or that check the check never made it to the original payee to begin with, so it wouldn't be a second check. It would be the first check, but just to the different person.
Okay, because I mean,
Yeah.
if one employee is doing this, then obviously he's going to get busted.
Well, yeah.
But
But
okay,
that little time being that comes in, it already has 2 different banks. But now it's that was probably about 6 years ago, 5-6 years ago, when we were having those issues. But now that's why they're making everybody put on the back of the check for mobile deposit only. So you can't do that first and then bring it in.
right. Okay. Thank
So
you.
it is protection. You're welcome.
Mhm.
Remember the movie Catch Me If You Can?
Yep.
Right?
Yeah.
It was
That's a good
low
movie.
tech bank fraud. That was the classic.
Yeah.
And now look where we are, where they're washing checks. That was, you had to have a micro printer back then, so the magnetic coating. But now you take a picture of your check, you can process it. You don't need the micro coating
Right.
anymore.
Yep.
Everything's done by image.
Hey, just some general things in relation to cybersecurity and internal controls. We got some of this over the years from we have an entity come in and audit us for cyber, perform a risk assessment, right, to determine your town's susceptibility to IT vulnerabilities, right, account for the sensitive data that you have, require your employees to have strong passwords with requirements to regularly change those passwords, update your software, right, patches and all, make sure that those are incorporated regularly. Conduct an audit of your software, and I think this is one of the things maybe John Mooney or Ray Serenelli can also mention, that there's a new disclosure requirement this year for towns that they have to do an inventory of their software. Monitor your problems, train employees on an ongoing basis. We also have one of our IT guy test our employees regularly, and he seems to have a lot of fun making emails and such that look real that are not, and having employees fail so that he can correct them. He gets a kick out of it.
But one of the aspects that we have in the cyber GIF is that we do phishing testing with our members, and really as a training process. I can tell you very quickly that Christmas Eve, I was called by my police chief a number of years ago, who asked me I said, "Are you okay?" He said, "Yeah, everything is fine." He said, "But I have a question." I said, "What's that?" He said, "What's a Bitcoin?" I said, "Why?" He said, "Because we got hacked in the communication center, and we don't have any records down, and they want Bitcoin." So, and that was from a phishing attack.
And I think one of the things the cyber GIF, I believe, has done is develop an incident response plan,
Yes.
which all entities should do too, and test it from time to time. And I think the last item I had here is really develop and test the continuity plan. So again, we get audited every couple of years by an outside firm that comes in and tests our people, both for social and also test our systems from a technical standpoint. They try and break in to our system. And look at some of the different areas that may need improvement, and their reports are always good. They're well worth the money we spend to have them come in and take a look at us.
But I think I'd used one company you did, which they plug a device inside your network and they find all of the holes. And the best way to describe it is if you punched a bunch of holes in a cardboard box, put it in a dark room, and threw a flashlight in the middle of it. That's what it does. It shows how everything escapes your network. That's great for finding weaknesses. And then you're right, for the intrusion detection, that's also another phenomenal thing to do, just to test it. In Bergen now, we do ongoing training for our employees. It's mandatory. If the person after the training then clicks on something during the phishing exercises, they have to sit not only with the IT director, but I have to be there with them. And if I'm sitting with you more than twice, I'm really annoyed at this point, and they know I'm annoyed. So the incentive is don't click. I have one more story. Is I was down at one of the MEL meetings. One of the attorneys, and we've just gone through all this cyber stuff, talking about how people give you these clickables. I get an email from the attorney with just a link. So I delete it. Why would I open that? So I get a call a couple weeks later. Hey, did you click that link? I said, of course I did. And I deleted it. And they were mad at me. I said, you sent me an email with nothing in it but a link. Why would I click on that link? I won't tell you the attorney.
No, don't.
we all wouldn't be surprised either.
What I would just like to add is I'm adamant about training. I think training and repeat training. And I know that we at Ghana Strong and Perma have to go through repeat training. And sometimes you feel like, oh, I don't have time for this, or you already told me this. But it's amazing the human brain and how it works when you see something over and over again, that you will absolutely follow that. You just automatically will follow it. And one of the biggest things is hovering on hovering your mouse over the address of the person that sent it to you to make sure it is that person. And because I've been at Perma for such a long time, I'm repeatedly getting emails from Dave Grubb that I need to wire money to this place or that place or this place or that place. And they don't know that I have no rights to wire anything anywhere. But I think what they're doing is they're just seeing the title and they figured, all right, her title has it. I don't know how they get the name. And this has been going on for years. So training is very important.
I just got an email yesterday from one of the deferred comp plans. It was a clickable. Hey, can you sign off on his loan? I delete it. Guy sends me an email. Hey, I just sent you a loan request. I said, I don't do those. Fax me or email me a scan of the loan document. I'll review it and I'll send it back that way. He was annoyed. I said, I don't care how annoyed you are. I'm doing it old school.
Yeah.
Hey, John, I just want to jump in and do our first poll on this topic. Okay, so you guys should see the first question. Select all that can be included as verification of a wire or ACH transaction. And you should be able to select multiple on this question. And then I'll share the responses in a minute.
Hey, John, you were saying that you had the employees there do the training in Bergen County. I mean, how many employees is that? And how do you get all of them to do it? I mean, we do it in our office here, and it's like pulling teeth for some of our employees to actually do it until you start threatening them, with penalties if they don't do it. How do you get that done in your area?
We have roughly 2,500 people, 2,500 employees across the county. I get a report on a weekly basis when the training initiates and who is and is not trained. I had one employee who refused to do the training at the end, so I cut off access to all networks. And his job was to communicate. Came to me crying about it. I said, if you finish your training, I'll turn it back on. So I think it comes from the top. You need to enforce that requirement that they become trained. And it was my request they get cut off, not IT's.
Right. Yeah, I
We
mean,
have the
that's,
same kind of thing, John.
Yep.
You know, we call it cyber jail.
So a couple
Nobody wants to
questions.
be in cyber jail.
One of the other ones was another suggestion is another great movie, All the Queen's Horses. I don't know if you've seen that movie. If you haven't seen it, watch it. It's about, I believe she was the clerk or finance officer, stole tons of money from the town. That was a great movie. I think it's on Netflix.
What's the title again?
All the Queen's Horses.
Okay.
It's a true story too. The
Nope.
other one says, does microtoner help to reduce check fraud? Paul, I don't think it reduces anymore, right? It's visual, not magnetic anymore.
Yeah.
All right, so we'll get done with that one. Will there be any policy templates? I think any templates or policies are going to be coming from the MEL. Right, Chuck and Pauline?
Yes. And cyber. Yes.
Yes.
Okay, so if you're looking for suggestions, I would go to the cyber GIF or the MEL or anywhere else.
Mhm.
As
Just
long
call
as you're a
Paul-
Mel member.
I just call Pauline.
No. Absolutely. Anybody can call me. I'm just kidding.
I think we're done with questions on this session.
Good.
Let me just do one more poll and then we can move on topics. You guys should see this next question. How many individuals are required to execute and confirm a wire or ACH transaction? You've got a couple options there.
With the wire, it's a soft token, so most of the time it's the one person who has the token or whoever has the token that can do it.
Hey, so while we're still up, I want to thank Paul because I grabbed him last minute and said, hey, Paul, you got a couple minutes to talk? I think he was going to be out golfing today because the weather's so beautiful, but he had to give it up.
It is nice, but wait, I gave it up for you.
Thanks. So Paul also does stand-up comedy if anybody wants the new banker, because he will keep you entertained from the second you start talking to him until you hang up.
Oh boy. I can get in trouble that way too. We have
He has
fun.
not gone through that special training yet. He's still waiting for it.
I have it. I pass it every time. I think about what I should say and I put that there. Not what it's like you. We say what we think.
While we're on the topic of cybersecurity and all, it's a more of a personal level kind of thing, just to watch for yourselves. Recently, one of our, local guys in town, very well known, very respected, very, very with it, fell prey to a scam. And he got as far as writing or going to the bank and getting a $45,000 check and sending it out to California to fix his computer. Now he's getting up there in age, but he's still pretty with it. And he realized after the fact that, he was scammed. And, they were on the phone with this guy for like 5 hours, just giving him the details of how to get this money out of the bank. And if they ask you any questions, like, because it was to a travel agency type business, and, if they ask you any questions, you tell them that you're just going into a partnership with friends, and he said, they wanted him to overnight it. And he's like, well, I don't know any UPS stores in my area. And within seconds, they had 3 of them where they told him that he can go down on a Saturday because it was a Friday that he was being told this. And, just every red flag that you warn your parents about and you warn, just any type of phone scams or anything like that. And he just fell for everything, hook, line, and sinker. Now, the good news is he got everything back. They were able to stop that UPS package from getting out there. So it does have a happier ending, but, just got to always reemphasize this stuff with everyone. If it's going to cost you $45,000 to get your computer fixed, maybe it's just time for a new computer, and just burn the old one and be done with it. But yeah, just be careful.
So I just got a text from the mayor of Wharton who wants to know who the attorney at the mill was. Says he's watching us.
Well, we did have one last polling question I can launch before we wrap this topic up. This one was from Pauline. Thank you for sending. Let's see. Okay, you guys see this final question on this topic. What security practice should you implement on bank accounts that issue checks? I think you guys hammered this one in.
We also got a request from somebody who needs about a 5-minute break. I'm betting they had too much coffee and they need a little.
Little break. Yeah, we can take a pause between this next topic if that's good with everyone. 5-10 minute break.
That'd be great.
Great. All right. Looks like you guys did a good job making sure everyone paid attention. They got the last 2 questions almost 100%. Share this one.
I just keep guessing.
Great.
Yeah. All right. So we take a 5-minute break.
Sounds good.
Reconvene at 10:50. Is that good?
Perfect.
Yep.
All right. We're at least 10:51. We might be 1 minute over. Ray, why don't you introduce you?
You?
You don't want to read your own, do you?
I don't even have much. I don't think I would have much to say.
All right, John, I'm going to introduce him.
Okay.
You want me to call you Raymond or Ray?
Ray is fine.
So Ray has been a part of the governmental entity group since 2008. His client experience includes planning, reviewing, and executing audits with a concentration on engagement planning in governmental and non-for-profit organizations, which includes municipalities, counties, county colleges, libraries, joint insurance funds, and boards of education. Ray holds the following degrees and licenses. He has a BS degree. We knew that you had the BS degree, though, in accounting from the College of New Jersey, certified public accountant in New Jersey public school accountant. He's also a registered municipal accountant. Ray's professional memberships include he's a member in the AICPA, which is the American Institute of Certified Public Accountants. He is also a member of the New Jersey Society of Certified Public Accountants. Ray also holds his Series 7, Series 66, and life and health insurance licenses. He also celebrates his 16th year anniversary with the firm this year. So Ray, next session, we're talking about budgets, caps, and everything budget, since it's that time of year.
Yep.
Are you leading off?
I want to jump right into it.
Yeah, sure. I think we lost a couple of people, but I think it's because we stopped the insurance side of this, but I think we're good.
All right. So I put together a little PDF of kind of reviewing the cap calculations because there's been quite a bit going on in that area, especially in the appropriations cap the last 2 years. So I am going to share my screen. Sharing the wrong screen. Wait, is this? What do you got? Do you see the local finance notice, or do you see calculators?
Local finance notice.
Local finance.
Oh, good. I did share the right thing. All right.
Good thing you're an auditor, not a techie.
As I always tell people this, as a millennial, I should be very good at technology, and unfortunately, just didn't stick with me. So, anyway, I got it figured out now, so we can go through it. So I'm actually gonna move my computer here a little bit so I can face this way and copy looking. So here is local finance notice 2024-03, which the local finance board passed. Some exceptions to the appropriations cap. So the 4 exceptions are the garbage and trash removal, recycling, liability insurance, and workers' compensation insurance. So a lot of people used the garbage and trash removal exception last year. So if you used it last year, you can't use it this year. And essentially what they're trying to make an exception for is these large jumps when contracts come up. So for most people, when they enter into a garbage, most likely a 5-year garbage contract, from 1 year to the next, we're not seeing big jumps. It's that when your 5-year contract is up, the new contracts that are being renewed are having substantial increases. I think I heard the statewide average last year in new garbage contracts was something like a 76% increase. So a lot of the garbage contracts were almost doubling, which, how can you fit a 76% increase into a 3.5% cap? So they've allowed for some exceptions for that. Same thing on recycling. liability insurance was not included last year, and workers' compensation insurance wasn't allowed last year. So here's just a little bit more detail on that. Here's where it discusses that if the municipality utilized the garbage and trash collection exclusion in 23-24, they cannot utilize it in the 24-25 budget. And then the last paragraph here, I think, is very important, and it allows for a cap-based adjustment for your health insurance. So health insurance has always had a little bit of a funny equation in how a portion of the increase is inside cap, then a portion goes outside cap, and if there's any remaining increase, that comes back inside of cap. So I did put together a little bit of an example that I'm going to try and go through. I do have to jump around on it a little bit because you're talking about how the levy cap workbook, the budget worksheets, and the appropriations cap and cap banking all work together. So I'm going to try and go through everything as slowly as possible, but I am going to have to jump around on this PDF a little bit to make everything work. So increase the size of that a little bit. This should be familiar. This is the levy cap workbook. And this is where you enter all your information to do the tax levy or 2010 cap information. However, a lot of the information entered in here is going to help you on the appropriation cap side too. So this is the first page, not much different here. Some of the pitfalls I found when I've been working through both health insurance and the pension contributions on the levy cap workbook is making sure that you enter the correct amount of prior year expenditure for the levy cap portion, which is going to be the total expenditure. So if I go down to my example, and we see that some of the insurance was outside of cap last year. So if I look at oh shoot, I didn't include sheet 15. So you want to make sure that you include in this number here, the 1,250,000 is both your inside cap and outside cap appropriation from last year. And same thing with this current year group health appropriation, because this is the tax levy side of things, not the appropriation cap side of things. So you want to make sure that when you enter the total appropriation for group health insurance, that you're using the total appropriation both inside and outside cap. So sheet 15 and sheet 20. The same thing on the pension and the PFRS appropriations. I know I have both of those here. So if you go to sheet 19, the prior year expended is paid or charged and reserved is this 481,741. But I also have an outside cap appropriation as well. And so when you add those both together and we go back up to this sheet, that's the total of the appropriation. And the same thing for the PFRS contribution. So just make sure when you're doing your levy cap workbook, you're including the total expenditures paid or charged for inside and outside cap. So that takes care of mostly the levy cap side of things. So in this year's levy cap workbook, there's also some additional sheets on the garbage and trash, on recycling, the liability, and the workers' comp insurance. So all you need to do is enter last year's total paid or charged plus reserved, and this year's paid or charged, and then it'll give you what's outside cap. So it's really anything over 3.5%. So when you go down to sheet 20, that portion should be outside of cap. And it's the same thing for the two other allowable adjustments. All you're doing on the levy cap workbook is entering the total amount expended and reserved, paid or charged and reserved for last year, and what your total budget is for this year, and it calculates the amount that you can move outside of cap. So it's pretty self-explanatory, but if you don't know that these sheets are in the levy cap workbook, even though they're for the appropriation cap side of things, you could get stuck having things inside of cap that normally wouldn't be, or in this circumstance could be outside of cap. So, I think the state has done a nice job, the local finance board, to try and help alleviate some of the issues that people are having with the appropriation caps. Especially, we're limited to 3.5%. And like I said, in some cases, we're seeing 76% increases in some line items. Or also, in just inflationary costs. Inflation was 4% last year. It was 6 or 8% the year before that. I mean, staying within the 2.5 or 3.5% on some during these high inflationary times can be pretty difficult. One of the more complicated things that I wanted to review with everybody is the appropriation cap calculation. And so normally what happens on this sheet is you start with your total budgeted expenditures. This sheet up here is provided by the state to help you, back out your outside cap expenses and then come down to what is normally on sheet 19, which is your inside the cap expenses. So in most normal circumstances, this number should tie here to this number, right? This was your inside cap expenses last year. That's what this number should be. However, as noted in the local finance notice, the local finance board and the Division of Local Government Services are giving you a cap-based adjustment for the items that were moved outside cap last year. So last year, there were exceptions for the solid waste. There were exceptions for pensions, and I believe recycling and gas. If I missed anybody can correct me on that. But so the 72,960, if we come to sheet 20 from last year, is this 44,625 and the 28,335 of pension expense that was allowed to move outside last year. So you're getting a cap base adjustment for that. And that was decided, I believe, a while ago. So the state automatically put that on everyone's cap bank calculation for the year. I think what was later contemplated was an allowance for health insurance. Now, like I said before, health insurance has always been allowed to have some portion of the expenditure outside of cap. The first 4% would be inside cap. The amount up to the state health benefit increase could go outside cap. And then if you still had further increase, that would come back inside cap. So in the example that I'm using in last year's calculation, we moved $106,000 outside of cap. In the example that I'm using, when we did this year's calculation, which again is done through the levy cap workbook, right? So you have the levy cap workbook, but it's helping you on your appropriation cap side of things. If you go to the health benefit exclusion calculation sheet that's in the levy cap workbook, and you come down to the bottom here, you'll see you have that out of the way. You have $35,000 that can be excluded from the cap. So if we go back down to sheet 20, there's $35,000 outside of cap. And what the local finance notice says is that the division is also granting a cap adjustment for group health insurance appropriation that is no longer outside of the appropriation cap due to the decrease in the percentage increase applied for 2024. And so this will be calculated there. The division will take the difference between the current and prior amount on sheet 20 and add that amount to the appropriation cap. So essentially what we need to do is go to sheet 20 and you can take the difference between the 106 and the 35, and that can be added in to your cap base adjustment. So when I'm doing my sheet 3B in my budget workbook, I'm not only taking the 72,960 that's allowed here, but I'm also taking the difference between the 106 and the 35,000. So that's a big change, and the one that's a little bit difficult to follow. And like I said, I know I jumped around a lot, but you have to jump around a lot from the levy cap workbook to the budget and to the appropriation cap calc. So normally, in normal circumstances, you start with your total budget appropriations, back everything out to come to what is usually on sheet 19. So if you did this whole calculation right, and you take your prior year amount on sheet 19, add in the 143,960, that should be this amount here. So if I go to sheet 19 and I take 18,231,603, I add in 143,960, that's my 18,375,563. So a lot going on there, pretty complicated stuff, but I just wanted to review that with everybody, because from what I've seen so far, I've reviewed four budgets so far this week, and the big theme that I'm seeing is interest revenue was incredibly helpful in boosting fund balances last year and being able to utilize in the current year budget, and that there's a lot of appropriation cap issues. I think the state has and the local finance board has done a lot to help municipalities deal with the cap calcs, but it is confusing to follow because it is a change. Not only is it a change from last year, but it's a change from a lot of prior years. So I'm going to stop my share now, and then open it up to discussion for everybody.
Just for a minute.
Making me work here, John.
The first thing that people need to know is where to find page 10, because that used to come out on the DLGS website, but now go up one page there to 10, this one, because the first thing that I had to try to do is find where the heck this was, and this is now in your fast portals in your introduced budget for 2024. There's two documents in there, one's a PDF of last year's levy cap workbook, and then this is the other page that's on there as well. So if you couldn't find it, that's where it's at.
So actually, they're moving almost all the documents to the new data portals and away from the old fiscal reports tab. Your 159s, all that's now being moved, and they're using the fast system to process them. Okay. I think it's also important to note, so that 99% of you don't care this, but those cap rules are different for counties. Right, we counties don't get those 4 exceptions. That's a tough love thing. And actually, the counties follow 2 levy cap calculations, not 1, and it's supposed to be the most restrictive, not the most advantageous. Although there is legislation that was just put forth recently that would allow counties to go for the most advantageous levy cap, not the most restrictive, which would be helpful. Because you're always fighting yourself. And if you switch from one levy cap to another, you lose all of your cap bank that you may have had in that levy cap.
Yeah, I think that's the hardest thing for a county is to, try and stay within your own cap, because if you move caps, you lose all of your bank. So I think there's always that, I don't want to call it a game, but a little bit of a game to try and ensure that you're getting the most advantageous cap bank, but ensuring that you don't go over and have to switch into the other cap.
True. So while we're on the caps, we had an interesting calculation this year with the county caps for Bergen, especially, where we did our cap calculation. And last year we took a $14.6 billion exclusion for health insurance because everybody saw health insurance going through the roof. Right, it was up 24%. So we took the exclusion last year knowing we needed it. This year they took our cap base and reduced us by the 14.6. So they started us off underwater and then calculated our 2% increase. So we started off $7.5 million underwater before we even started working on our budget. So there was several county finance officers asked the division to reconsider I know I took an example of Bergen. If nothing changed except for just moving forward with cap calc and showed that we were underwater with the calculation, which wasn't right. I mean, you needed it because costs were going up. They're not going to go down. They have changed their position and they've said that they will take last year's exception minus this year's exception, and that becomes your cap-based adjustment coming into this year, which still what you're doing is you're foregoing this year's exception. So if your costs are still going up, you're going to end up being underwater. But that was a different one. I know, Ray, that you and I talked about it a lot. It just seemed like it was not unfair is not the right word. It wasn't practical. It wasn't common sense. So, but they did reconsider. They gave a little bit of wiggle room. So fortunately, a lot of counties are seeing that there is no increase in this year's health insurance or less than the exception threshold. So they're restoring the entire cap-based adjustment from what they got last year.
I would just add that if you're doing any redevelopment and you're including anything with regard to pilots, the division has been very helpful with regard to giving you cap relief with the amount of the pilot. Remember that on the tax side, when you do a pilot, you lose the assessed value in the new construction. So it's only fair. You can't get it there. You got to get some relief somewhere. So, in many of small towns, we're doing redevelopment at this point in time. It's been very helpful.
So Chuck, what is the relief that they're providing for you? The value of the new construction that you've improved?
They're providing, no, not the value. They're providing me the actual exclusion is the billing.
Okay. Now, I know there's
Yeah,
a
I think
couple
that
towns that ran into, I think, your same situation where they were getting tons of money in, but they couldn't spend it because they're restricted by the 3.5%.
By the cap, right?
it's very similar to new construction, right? You're losing that new construction, so I think it logically makes sense that they're giving you a cap-based adjustment for that in terms of what you're billing to those redevelopment programs.
Right, exactly.
And actually, the first time I think I heard of that was Bridgewater. Natasha Turchin went to the division and said, "Hey, look, this isn't right. We're growing, we're collecting additional revenues, and we're not able to grow our services commensurate with the increased growth of the redevelopment." And I think her argument was made well, and that's why everybody else is able to enjoy that.
Yeah, and the other thing is, as some towns move to revenue-based programs, we moved from a volunteer EMS program to a paid EMS program. We also requested and got a cap-based adjustment for EMS revenue.
That's nice. I didn't know that one.
Yeah, I know in the past I've had discussions with the division. If you're bringing in a new line of service, and it's going to be inside cap, unless it's from the dissolution of a utility, they normally don't give a cap-based adjustment for that. But it sounds like, we're in some trying times with how much inflation is affecting us. It sounds like they're taking some pretty logical steps to try and help with, municipalities adjust to those things where they're bringing in a new line of service and there is inflationary costs with that, and they're allowing for the cap-based adjustment. So from what I've seen so far, towns that I never thought would have a cap issue are using their bank. And I think towns that have had cap issues in the past, this is going to be some tough times for them. So hopefully some of this relief that we're getting in terms of the local finance notice and being able to move some things outside the cap, hopefully most municipalities can find a way to make things work.
So another question I had for today's agenda was the ARP money. If, this is the final year that we as local government can use that as a revenue plug. And I think that we've discussed it many times before, and hopefully that the people in this session have been planning for an exodus, right? Because next year it's not there in your budget. And I know that's a scary thing for a lot of people. I know in Bergen, when I came in, we were using $39.6 million as a revenue plug, revenue loss. We've been reducing the dependence on that by 1/3 every year for the last 2 years, and next year will be my final retreat from that. But we've been planning for it. We have an exit strategy, so hopefully everybody else is thinking the same way.
In Little Falls' case, we used it for 2 years, and timed it so that the pilot payments came in after those 2 years were done.
That's smart.
And I have several pilots working, and we staggered them. My understanding of the Jersey City story is that they had a good number of pilots and they all ended at the same time. So your point about staggering it and being prepared, I guess the word to the wise is if you have multiple pilots, they should not all come due at the same time.
No, not at all. And anybody that's got a pilot lately, I know you probably read the stories in Parsippany. Parsippany's been under attack by the school board, by actually one of their own council members, attacking them for the use of pilots and claiming the school is being harmed in some way.
But
anybody that knows how school
that's not
budgets,
accurate.
No, it's not. Anybody that knows how school budgets put together is their budget. Part of their cap calculation is student population, and that's what they're claiming is the harm is that they're going to have an influx of students. Well, first of all, people aren't making babies anymore. Student populations are dropping everywhere. So that one, but if they do go up, part of their cap calc for the schools is there's an increase in what they're allowed to increase taxes by. But they formulate those budgets and they hand them to us, and we pay them 100%. So now you ask, where are they harmed? Because they get an exception for the students, they get 100% of what they ask for, and municipalities are not in that same boat. Chuck, I don't know if you have anything else to add to that.
Yeah, my comment is this, John. If you want to make it easier for municipalities, we should just let all the entities bill their own taxes.
It's funny too is the schools want a portion of the added omitted taxes, but they don't want to pay out the appeals, and they're probably like 70% of the appeals, right? They're the biggest nut. So they want all the good stuff and none of the bad stuff. So let's have them share in everything if they want to share in everything.
Absolutely.
Oh, it's also the cost of collection and assessing too.
Right. So it's interesting, and I only bring it up because I was at the meeting in Parsippany where they must have had 400 or 500 people show up chanting, and they got these people all riled up that their kids were going to lose their music programs, that all the after-school groups were going to be going away, and they fed them a bunch of misinformation. And they got, parents, it's emotional for them. It's their kids. Of course, it's about the kids. But don't let the truth get in the way of a good story because they were lied to.
Yeah.
And that's the shame of it is that, they react emotionally and somebody's there just winding them up. I know, Chuck, that we've talked about
it's unfortunate. There's only one comment, John.
Sure.
It's unfortunate because the redevelopment relationship with the pilot, when you're doing areas that are really in need of redevelopment, we took out an entire industrial area in the middle of town that was, built in the 30s and 40s, which didn't make any sense for us at this point in time. We're basically a residential community. The only way we really could have gotten that done was through the use of a pilot.
Right. The saying is, but for the pilot, project wouldn't happen.
Right.
But you're taking a distressed or what's a technical term when they go and look for it? Not dilapidated, but it's an area that would not be developed if you didn't give them an incentive to do it, whether it's environmental or something else. And sometimes it's the infrastructure, right? The developer may have to come in and increase the water, the sewer to get to them in order to build. So there's a lot of effort on the municipal side to pay for this to get to that point, but yet the schools don't want to participate in that. They just want they want the icing on the cake.
And think about what's happening now after COVID with regard to office buildings.
Right.
So there are so many people working from home, office building rentals and leases are down. I would love for one of my office buildings to come and tell me they want to do a redevelopment study on the building. It hasn't happened yet, but I think that we're going to get there.
I think we are.
So one thing I did want to touch on, we mentioned the budget hole that redevelopment revenue can leave you with, after your 5 years and you're not collecting that anymore. This is not an easy thing to do, but I can't say I came up with it. One of my towns came up with it, and they got the mayor and council to buy into it. But they would never budget more than what the municipal portion of taxes was going to be once that property came online. So even though in some years they knew they were going to collect 250,000, they only budgeted for 100,000 because they knew once that property came online, that was going to be the revenue they were going to receive from the tax roll. And so it didn't create a budget hole. Once that revenue dropped off from as a revenue, it came on as an assessed tax. Now, trying to sell that to the mayor and council when you have, pretty substantial revenue coming in, it's a great long-term plan. It helps bolster the fund balance in the years when you're receiving that money, and in the long term, you're not over relying on any revenues, but it is something tough to sell to an elected official that we have some additional revenue here, so that's not going to be utilized in the current year. So it is a thought. It is a good long-term plan, but a tough one to try and sell.
Yep, it is. Right, and elected officials tend to be transient. We get them for a couple of years and they go. I mean, you're fortunate if you've got one that's long-term, stable, understands what's going on, and can talk some sense into the new people, but that's not always there.
Right, your plan sounds like a good idea for, going to a pay-as-you-go basis, maybe with capital and paying down your debt.
John and I have already had this dispute.
Chuck and I wrote an article many years ago. It was a back and forth on pay-as-you-go versus debt-free and balancing the two. Because you may have something that's a big legacy project that you can't pay for cash, so that one has to be spread out. But if you come to a more routine program where you're paying for everything every year, and you've got no debt, as long as you're maintaining the same level, it's the same thing, but you just don't pay for the cost of funds. But that was a long time ago, Chuck.
It was a long time ago.
That's probably 20 years.
Probably.
I guess we're both getting old.
Yeah, I don't have a horse in that race. I'm fine with pay as you go, or people want to issue debt and spread the repayment of the debt over the useful life, the people who are using it or paying for it. Either way, I don't have a horse in that race.
As long as you manage it and you don't have an unfair impact to the tax rate, I think it works either way.
It comes down to planning for both your capital needs and your debt needs.
So your comment is funny, Bud, because the town that did that is about 3 years away from being debt free.
Oh, wow.
Yeah.
I'll jump in here and do our first polling question for this topic. You guys should see it up on your screen now. What is the biggest concern you have with your 2024 budget? And there's a couple options here. I'll leave it up for a minute and then I'll share.
So while that's happening, there's a question comment from Tom. Did you see that, Mr. Rheinhardt?
Also, many of these pilots come from the 100% affordable housing developments in which the municipality has to issue debt as a part of the contribution and will pay debt service payment for the next 20 plus years. I wasn't aware of that one. Thanks, Tom. Blighted area, whoever said that, thank you.
You can see the responses now.
Wow, it must be nice. 22% of the people have no problems dealing with it.
Good long-term planning.
Sometimes it's blind luck.
Sometimes it's better to be lucky than good.
I've never heard that before. Wait, were you done?
I'm done with the cap calcs. I did want to mention one other thing on interest on investments. So that was the other area that I've seen, and I mentioned it before, that the two themes seem to be the appropriation cap and interest on investments. So because you can only budget for what you received in cash, you know, everybody's 2023 budget had a pretty low interest on investment budget number. And what was collected, obviously, we've seen what interest rates have done over the past year, have skyrocketed. So almost all of the budget, all the AFSs that I've done and the budgets that I've looked at so far had a lot of interest on investments over what was budgeted. So obviously anything that's received more than what's budgeted for is going to fall to your fund balance. So I would say almost every single municipality that I looked at had an increase in fund balance. I think the largest I saw, I had one municipality had $180,000 budgeted for interest on investments and collected somewhere close to $2 million in interest on investments. So that's great. And the fund balance going up and being strong is good. I think, you know, the biggest fight, and we've talked about this, selling to your mayor and council, is, you know, that's not going to be that way forever. Interest rates are high, and a lot of people, as John mentioned, are still have their art money. And so you have some cash sitting in your bank account that's accruing interest that is coming in as interest on investments. Well, that all is going to get spent this year. So, you know, I would say your cash flow position will probably be reduced over 2024. It seems like interest rates are stable for now. They've said they're not going to go any higher, but they're still sitting pretty high and haven't been reduced yet. I will say, you know, what we've seen from experience is that when they do go down, they go down pretty quickly. It seems like they go up by about 0.1% and they go down by a percentage point when they do get reduced. So they go down quicker than they come up. So, you know, I think, you know, for the next 2 years, it would seem like we're going to be able to rely on some level of interest. But, you know, in that example that I used, going from 180,000 to then budgeting 1.8 million is not going to be a good long-term plan. I mean, you might even see that number reduced in 2024 just from the reduction of the cash position and spending the art money. And then you have a budget hole next year. So I think it's a great tool to use to try and keep taxes low, but just be careful in, you know, how high you let it go. I would say maxing out that interest on investments, you know, is definitely not a good long-term plan.
There's been some indication that it's going to drop 75 basis points over this year. You know, Chuck and I were both, Chuck still is, and Pauline involved with the JCMI. You know, the whole point of that program was to invest long and get stabilization in rates so that you're not reacting to the short-term ups and downs, but actually stabilizing over time. But Chuck, I don't know if you want to add to that in the philosophy of the JCMI.
Basically, what we've done is we've taken a large portfolio at the joint insurance fund and at the statewide joint insurance funds, and put together a program that helps the members with their short-term bond anticipation notes, which we did very well during COVID with regard to that. And of course, we are in the business of earning money for the JCMI, so that's not the only purpose we have. But yeah, we've gone to a little bit more of a longer rate to take advantage of the current rate situation, because we're anticipating some drops as it comes through. So I know locally we've gone to one of those banking sweep accounts. John, are you using those in Bergen County?
Yeah.
That have been very, very good for us.
I wish Paul was still on. They also have the programs where they take your money so that you don't exceed $250,000 in any one bank, so that they're
Right.
subject to FDIC and not good bust. So that the collateralization makes it cheaper for the banks to do business with us.
Mhm.
That's
Yeah.
another strategy. But you know, the MEL and the Joint Cash Management and Investment Program, the JCMI, they're full accrual. So you get to experience that return. The downside to municipal government is that we're on cash basis. So if we invest outside of our year, we don't realize that gain.
Right. Well, that's true.
I think I might be a little bit more optimistic on where investment income is going to be this year. I think we might see something similar to 23. I mean, rates were going up over time in 23. I would expect the Fed to be a little bit tougher with reducing rates during 24. I obviously expect them to be reduced, but I think interest income overall might be somewhere around the same point in 24 as 23. I don't think we'll see a dramatic drop.
And that's probably politically driven.
Mhm.
Nobody wants to do anything before the elections. Yeah.
That's my crystal ball anyway.
One of the conversations I had with one of my clients last year was that they felt as though they were sitting on too much surplus. And then we had the conversation of what to do and how to use some of it. And my thing is always use it on one-time expenses if you're going to, try to draw it down just a little bit so that you're not balancing your budget, with fund balance and reducing the tax rate. And I guess that conversation had gotten forgotten because here we are this year where they're using a significant amount of fund balance and the tax rate dropped. And it's like, what are we doing, guys? It's just it doesn't. So the committee people have to really get on board and start understanding the ramifications of doing that. And, with interest rates being at what they are, they see that healthy influx of cash dollars and it doesn't help the cause because they just keep generating but there's going to be a tipping point and they got to realize that because they're going the wrong way. And, I don't mind them using the money, to buy a piece of equipment or something that's not going to be in the budget next year, but to continually use that to reduce your tax rate, we're heading towards a bad spot and they don't listen. So
Mr. Mooney, I could tell you haven't been in a Jon Rheinhardt CMFO class because you used the term surplus and John hates that term.
Fund balance.
fund balance. I just finished my school season, so I still use surplus there.
Katie, do we have another polling question?
We do, yes. Let me launch that one. That was on those ARP funds. Okay, you guys should see the second question. Where are you in relation to expending ARPA funds? And I'll share when everyone gets their response in.
Just so to remind people, I believe the deadlines are obligated by December 31st of 24 and expended by December 31st of 26, if I remember right.
All right. You guys should see the responses now.
It looks like people are in pretty good shape.
Yeah.
Good.
That's good.
Okay, do we have anything else for this session?
I've actually got 3 bullet points I'd like to touch on just quickly, just more comments than anything else. As we focus on our infrastructure needs, whether it's paving or anything else, the cost of those, the supply still continues to rise. It's not as bad as it was in the middle of the pandemic, but we're doing less and paying more. So I think that's something that people need to be cognizant of. While at the same time, if you're issuing debt to finance your projects, those rates are still a little high. So the cost of borrowing the funds to pay for the projects that are already too expensive means that you're getting a lot of pressure on that side of your budget.
It's true.
So, it's doing more with less or doing less with more. So it's an inverse relationship. And, the budgetary constraints that we're subject to, while it's an arbitrary 2%, which it's a good thing Sweeney didn't win to get his 0% on the caps, because we really would have been screwed and we would have been cannibalizing our operations. But if you look bigger picture, the legislature continues to plague us with or saddle us with bills that cost us more money. The workers' comp bill, the what was the one on the sexual harassment, or the predators one that goes back? It has no statute of limitations if there's been a child that was abused in some way. But they continue to hit and hit mostly local government and saddle us with these things, but there's no relief on the ability to pay for them, which is an unrealistic expectation.
It's,
So
it's true. The one that I think hurts us, and Pauline can attest to this better than I can. The one that hurts us the most was the one where they changed the offset from workers' comp and pension.
That killed us.
They reversed it, right, Pauline?
Completely, yes. So
Yeah.
now the funds are, especially the excess funds, are really hurting. They really felt the impact of that legislation. Very much so. We expected more from the sexual molestation change, but fortunately, very fortunately, that we did not get what we expected. There are some, absolutely, that go, but we did not get what we expected. But with the workers' comp pension, yes, the insurance funds have gotten hit very hard.
And then that filters down into the assessments and whatnot that you deal with in your budget.
Yeah, I mean, we've never had on the GIF level, especially the local GIF level, we really haven't had additional assessments. Oh God, I can't even, I don't even know if we ever had any. Some of the GIFs have never. I don't know what's going to happen this year. The financials are not fully completed for December because they're pending other professionals to oversee the reserves and actuarial reports, but it's just getting harder and harder to get back to where we were 10 and 15 years ago. And the state is not helping us at all.
They are not here to help us. It's kind of like the IRS.
Yeah. Oh yeah, there's another one of our BFFs.
We got a couple new questions. Did state aid information come out yet? Anybody know that answer? I do not.
I didn't see.
I just checked right now. It's still not out. I would guess Monday or Tuesday next week.
Right. Somebody asked the question if they had obligated all their funds by the end of 2025 or 24, and then something comes in lower, can you reallocate? My assumption would be no, because you had to have had the obligation in place by the end of 24. Anybody else have a different answer?
No,
I
agree
did
with
see
you.
something about reobligating if in regards to change order, but I don't remember exactly the circumstances. I can research it and include it with what Katie sends out.
Okay. The last one was the pensions offset transferred the burden from the state to local units, which I think we already discussed. That was just a shift with no ability to pay for it. I don't see any more.
So there is one thing, after the obligation deadline, recipients are permitted to replace a contract or sub-award that was entered into prior to December 31st of 24 under the following circumstances. The recipient terminates the contract or sub-award because of the contractor or sub-recipient's default. The contractor goes out of business. The recipient and contractor or sub-recipient mutually agree to terminate the contract or sub-award for convenience. And the third was the recipient terminates the contract or sub-award for convenience if the contract or sub-award was not properly awarded. There's clear evidence that the contract or sub-award was improper and the recipient documents the termination is not properly awarded.
So because you save money doesn't mean you can reuse it. think
Good
I have
question.
nothing else.
Okay, well, thank you all for your time. I appreciate the panelists. I think it was a good session, and I appreciate everyone who attended. Katie, if you want to, unless the other people, panelists want to say something before you do your normal roundup, Katie.
Paul Yali just texted me that one of his new clients just had an ACH confirmation that was a valid one, but he was just saying it's further evidence of the open communication on the banking.
That's good. No, thank you. Thank you, Bud, for the invitation. I enjoyed it and wish everybody well.
Thank
Thank
you,
you.
Bud, and everybody have a wonderful weekend.
Thanks, everybody too. Enjoy your weekend.
Great.
Thank
Thanks,
you.
everyone. Thanks for joining us. I just want to remind all the participants, thanks for being on. And the follow-up survey will come up in your browser when we end the call. So just complete that to let us know what credits you need. And we'll be in touch with the recording, any other presentation materials, follow-up materials, like Bud said, that we have. So we'll email you guys next week with the recording as well. So thanks again for being on the call. We appreciate our panelists and our attendees, and everyone have a great weekend.
Thank you all.
You
Take
too,
well.
Katie.
Take care.
Thanks.
Bye.